Have you ever heard the saying, the market doesn't bankrupt investors, their mistakes do? Now, imagine this. You place all your trust in what seems like a golden investment opportunity. But in just a short time, the hard earned money you've worked tirelessly to save vanishes like smoke. The reason? It's not the market, not the economy, but the decisions we unknowingly make and repeat that lead to costly failures. Here's the catch. Many investors continue to make these mistakes without even realizing it. They cling to the hope that one lucky break will turn everything around. But the harsh truth is, the more mistakes you make, the deeper you sink into a cycle of losses. Not just financial, but also emotional, draining your confidence and motivation to pursue long-term goals. The most expensive mistake in investing doesn't just cost you money, it robs you of the real opportunities to build wealth. Are you making this mistake right now? If you've been investing for a while but still feel stuck, unable to make progress, this might be the wake-up call you need. This mistake doesn't discriminate. It affects newcomers and seasoned investors alike. But here's the good news. Once you identify it and take action, you can unlock the path to sustainable success. Join ValueGold as we uncover what this mistake is and, more importantly, how you can overcome it with smart, practical strategies. And don't forget to hit subscribe to the Value Gold channel today, your go-to destination for hard-earned lessons, real-world investment strategies, and insights you won't find anywhere else. Success begins with the right preparation, and Value Gold is here to guide you every step of the way. What is the most expensive mistake in investing? The most expensive mistake many investors make is investing without sufficient knowledge and a clear plan. This isn't just about not having enough information, it goes deeper. It's about misinterpreting data, failing to conduct thorough research, and blindly following trends or popular opinions without truly understanding the fundamentals. Too often, people jump into investments based on hype, promises of high returns, or fear of missing out, FOMO, rather than carefully considering whether the opportunity aligns with their long-term goals and risk tolerance. One of the main reasons for this mistake is the allure of quick profits. Let's be honest, everyone dreams of striking gold overnight. But the reality is that investing is not a lottery ticket. It's a long-term journey that requires patience, discipline, and strategic thinking. Without a clear plan, investors are like sailors without a compass, easily swayed by every wave of market movement. The slightest drop in stock prices or a rumor of a downturn can trigger panic, leading to impulsive decisions like selling too early or doubling down on risky bets. What makes this mistake so costly is not just the immediate financial loss. It's the compounded impact over time. When you don't have a solid plan, you not only lose money, but also miss out on opportunities to build sustainable wealth. You might sell an asset too soon, failing to realize its long-term potential, or invest in something that doesn't align with your financial goals, wasting valuable resources and time. These errors can set you back years in your financial journey, leaving you stuck in a cycle of chasing returns without ever achieving real growth. Think about it. Are you making investment decisions based on sound analysis, or are you simply reacting to market noise and emotional impulses? Are you following a plan tailored to your goals, or are you relying on advice from unreliable sources and hoping for the best? The harsh truth is that this kind of unstructured, uninformed approach is not just a misstep. It's a pattern that leads to repeated failures and mounting frustration. The good news? This mistake is entirely avoidable. By taking the time to educate yourself, set clear objectives, and build a disciplined strategy, you can transform your investment approach and avoid the pitfalls that trap so many others. Remember, investing isn't about luck. It's about preparation, patience, and making informed decisions. Don't let this costly mistake hold you back from achieving the financial freedom you deserve. What causes this costly mistake? The root of this costly mistake often lies in a combination of psychological biases, lack of preparation, and external influences. One major culprit is the fear of missing out, FOMO. When investors see others profiting from a hot stock or cryptocurrency, they feel an urgent need to jump in without fully understanding the risks or whether the investment aligns with their own goals. This herd mentality often leads to poor timing, such as buying at market peaks or selling in panic during downturns. Another common cause is overconfidence. Many people believe they can outsmart the market or that their instincts are enough to guide their decisions. While confidence is a good trait, in investing, overconfidence without a foundation of knowledge can lead to reckless risk taking. Investors may ignore red flags, fail to diversify their portfolios, or hold on to losing investments too long, believing they can predict a turnaround. Lack of a clear investment plan is another critical factor. Without a strategy that defines your risk tolerance, financial goals, and timelines, it's easy to be swayed by short term market fluctuations or tempting get rich quick opportunities. Without this roadmap, every decision feels like a gamble, and emotions such as greed, fear, and doubt take over, leading to irrational choices. Finally, many investors fall victim to misinformation and unreliable sources. Whether it's advice from unqualified individuals, sensational headlines, or unvetted tips shared on social media, basing decisions on questionable information can lead to disastrous outcomes. In a world flooded with investment advice, discerning what is credible and what is noise requires effort and critical thinking, a step too often overlooked. Ultimately, these causes combine to create a perfect storm, trapping investors in a cycle of repeated mistakes. Recognizing these underlying factors is the first step to breaking free and adopting a more informed and disciplined approach to investing. The consequences of this costly mistake. The repercussions of investing mistakes, particularly the lack of knowledge and a clear plan, can be devastating. The most immediate consequence is financial loss. Investing without proper research or blindly following trends often leads to buying high and selling low, eroding your capital and making it harder to recover. But the impact goes far beyond just losing money. It affects your confidence, decision making, and long term financial goals. When investors experience repeated losses, they often develop a fear of taking risks, even calculated ones. This fear can lead to missed opportunities. Imagine pulling out of an investment too early, only to watch it soar in value years later. Alternatively, you might avoid entering a promising market altogether because past failures have left you hesitant and unsure. Over time, these missed chances can significantly hinder your ability to build wealth. Another serious consequence is the psychological toll. Losing money due to poor decisions can cause immense stress, frustration, and even feelings of failure. It creates a negative feedback loop. After one bad decision, investors may become overly cautious or overly aggressive, both of which can lead to further losses. This emotional instability clouds judgment and prevents you from making rational, well-informed choices. Moreover, consistently making mistakes can damage your ability to stay on track with your financial objectives. Without a clear plan, you might focus on short-term gains at the expense of long-term growth. This reactive approach makes it nearly impossible to build a diversified portfolio or take advantage of the power of compounding over time. Instead of progressing toward financial freedom, you find yourself stuck in a cycle of setbacks and recovery. Finally, the compounding effect of these mistakes can jeopardize your ability to achieve your dreams, whether it's retiring early, funding your children's education, or reaching other life goals. The consequences of poorly informed decisions ripple across years, underscoring why avoiding these mistakes is critical. Recognizing the serious, far reaching impact of these errors is essential. By understanding the consequences, you can start taking proactive steps to safeguard your investments, regain control, and set yourself on a path toward financial success. How to recognize if you're making this costly mistake. Recognizing whether you're falling into the trap of costly investment mistakes requires honest self-reflection and a closer look at your decision-making process. The first red flag is emotional investing. If you find yourself buying stocks or other assets out of excitement, fear, or frustration rather than logical analysis, it's a strong indication that emotions, not strategy, are driving your choices. For example, chasing a trending stock because everyone is talking about it, or selling during a market dip out of panic are classic signs of this behavior. Another warning sign is lack of clarity in your goals and strategy. Ask yourself, do you have specific financial objectives, or are you investing just to make more money? Without clear goals, you're more likely to jump from one opportunity to another, constantly reacting to market movements instead of sticking to a plan. If you can't articulate why you're investing in a particular asset, it's time to reassess your approach. You might also notice a pattern of frequent trading or impulsive decisions. Are you constantly buying and selling, trying to time the market, or follow the latest trends? While active trading can sometimes yield results, for most investors, it leads to higher transaction costs, taxes, and missed opportunities for long term growth. This behavior often stems from a lack of confidence in your investments, which itself is a sign of inadequate research or planning. Over reliance on external advice is another indicator. If your investment decisions are primarily based on tips from friends, influencers, or online forums rather than your own analysis, you're putting your financial future in the hands of others. While seeking advice isn't inherently bad, blindly following it without understanding the underlying rationale can lead to significant mistakes. Finally, take a moment to review your portfolio. Is it diversified? Or are you overly concentrated in a few sectors, stocks, or high risk assets? A poorly balanced portfolio increases your exposure to risk and is often a symptom of impulsive or uninformed investing. If any of these signs resonate with you, don't panic. The first step toward improvement is recognizing the problem. By acknowledging these patterns, you can start taking corrective action to regain control of your investments and build a more stable financial future. Solutions and strategies to avoid this costly mistake. Avoiding the most expensive mistake in investing requires a proactive and disciplined approach. The first and most crucial step is to educate yourself. Knowledge is your strongest ally in the world of investing. Take time to understand the basics of financial markets, asset classes, and risk management. Leverage credible resources, books, online courses, and even professional advice to build a solid foundation. Remember, the more you know, the less likely you are to fall victim to hype or misinformation. Next, it's essential to create a clear investment plan. Define your financial goals, risk tolerance, and time horizon. Are you investing for retirement, saving for a home, or building an emergency fund? Once your objectives are clear, craft a strategy that aligns with them. A well thought out plan acts as a roadmap, keeping you focused on the bigger picture, even when the market becomes volatile. Another key strategy is to control your emotions. Investing can be a roller coaster, but emotional decisions are rarely good ones. Develop the discipline to stick to your plan, even during market downturns or periods of rapid growth. Avoid chasing hot stocks or selling in panic. Instead, rely on data and analysis to guide your choices. Diversification is also vital. Don't put all your money into a single stock, sector, or asset class. Spread your investments across different industries, geographies, and types of assets to reduce risk. A well-diversified portfolio can help protect you from significant losses in any one area while providing more stable returns over time. Regularly, review and rebalance your portfolio. Markets change, and so do your financial circumstances. Periodic reviews ensure your investments remain aligned with your goals. If one asset class has grown disproportionately, rebalancing can help you maintain your desired level of risk and reward. Lastly, consider seeking professional guidance if you're unsure where to start. Financial advisors or planners can provide valuable insights tailored to your needs. While it's important to understand and oversee your investments, having an expert to guide you can be an excellent safety net, especially if you're new to investing. Avoiding costly mistakes isn't about achieving perfection. It's about creating a system that minimizes risks and maximizes long-term potential. By focusing on knowledge, discipline, and strategy, you can safeguard your financial future and turn investing into a tool for lasting success. Take action and secure your financial future. Now that you've identified the most expensive mistake in investing and learned how to avoid it, it's time to take action. Remember, success in investing isn't about luck or quick wins. It's about building a solid foundation of knowledge, following a clear plan, and staying disciplined even in the face of uncertainty. Start by evaluating your current investment approach. Are you making informed decisions, or are you still influenced by emotions, trends, or unreliable advice? If the answer is the latter, don't wait for another costly mistake to wake you up. Begin by setting clear financial goals, educating yourself on market fundamentals, and diversifying your portfolio to reduce risk. Also, remember that investing is a marathon, not a sprint. Patience and consistency are your greatest allies. Even small, well informed steps today can lead to significant rewards in the future. Don't let past mistakes define your journey. Use them as lessons to guide you towards smarter choices. Lastly, take advantage of the resources and tools available to help you along the way. Subscribe to the Value Gold channel to stay updated with expert insights, proven strategies, and lessons learned from real world investing experiences. Surround yourself with a community of like minded individuals who prioritize long term success over short term gains. Your financial future is in your hands. By taking control of your decisions today, you can pave the way to sustainable wealth and achieve the freedom you've always dreamed of. So, are you ready to make smarter, more confident investments? The time to act is now. Let's build success together, one informed decision at a time.